Hey everyone, it's Nick with Us versus Herd. Thanks so much for joining this stream. If you're watching live right now, if you're watching later, thanks so much for watching this. If this is your first time here, please hit that subscribe button. Appreciate it if you subscribe. If you're already a subscriber, thanks for watching. What we want to talk about today is right now the Dow was down 54. S&P's closed up, Dow's down, and NASDAQ was up. So S&P's up, Dow's down, NASDAQ was up, and kind of a very interesting day here in terms of, we gapped up. We've gapped up here on the S&P's and pretty much stayed flat the rest of the day, just killing premium here. We dipped down a little bit, but we still closed. The S&P still closed up, but it was pretty much a face ripping kind of day. It was. We have Square. Square was down quite a bit and then went up. AMD's up 9%, up $2.50. Baba was down $6, almost 4% there. Chipotle, that was up another 2%. And Tesla was up another almost 9% today. And a lot of these trades that we've been trading AMD, Baba, Tesla quite heavily the last few days, and mainly because there's been a lot of movement. And I actually, if you're not part of our free options trading group, the link is below. I posted all my trades in there. Took some trades off today. Was up around 214 on the day. Made a couple trades. Did some things here. Hey, what's going on, Jeff? If you're here, say hello. Want to meet everybody. But what I want to talk about today is a lot of people get scared trading options. A lot of people get discouraged. Sorry, I was just closing something out over here. A lot of people get discouraged when trading options because trading options is hard. There's a lot of different things. There's things that you can control. There's things that you can't control. Like you can control your emotions, but it's a learned skill. You can control when you enter a trade, but that's a learned skill. You can control when to cut losses, but that's a learned skill. But then there's things like outside of your control, like Alibaba. Jack Ma over the weekend said he's going to retire from Alibaba. You don't know that's coming. Elon smoking pot. You had no idea that was coming. Elon taking Tesla public. You had no idea that was coming. So you had these things you don't know. Nobody knows except for the people that are doing them. And you have to, trade. Always have I tell everyone, have an entry strategy, but also have an exit strategy. No, I knew. I said I sold Elon the weed. Well, one person knew outside of Joe Rogan and Elon, I guess, and he's here in our chat today. Well, welcome, man. Congrats. hope he paid a premium on that, or you shorted stock. But a lot of people get scared, like when you're in a losing position. I'm going to take this Tesla situation here. I'm going to actually show you my chart here. I'm actually going to look at this Tesla situation here on my upper right. Tesla went from 305 down to 252 in a week, and this is very scary, especially I had a long position. And on last Thursday, when it was bottoming out over here, I actually put a long position on because I thought okay, it went down here on Wednesday, started to recover on Thursday, and it was pretty nice. Hey, what's going on, crypto? Nice that you're here. It started to recover, and I actually had a long position. I sold a put spread. I have the I have right now this 285. I'm short the 285 put and long the 282.50 put. I'm long that, and as you can see here, we had a huge drop due to all the news, bad publicity, and stuff like that. But you can't be scared. I was at max loss. One day I put the trade on. I was max loss. A few hours later, less than 24 hours later, I was max loss. You can't be scared when things like this happen because. If you do that, I was already at max loss, so I couldn't really lose a whole lot more. So the risk, was what it was. It wasn't. A lot of people will have a knee-jerk reaction, take the loss, roll it. But I just left it alone. I know that a lot of times, like for myself personally, like knee-jerk reactions are usually the worst reactions. Just like sit on it. You know, it recovered. It went from 252 the other day. It went from 252 back up to 268. Recovered quite a bit. And then today we had a huge $22 run back up to 285 here. And as you can see here, I was at max loss on this position, but now it's profitable by $17. Yeah, I know that's not a huge win, but it was at max loss already. I was already discounting this, so getting this 127.50 back into my account, or unrealized, obviously, but getting this back, you know, it kind of pays. Like patience, when you're selling premium, patient pays. And also having an entry and exit strategy. I have my exit strategy here because I normally, when I sell options, I usually take something at 50%. We had someone in our options trading group commenting about AMD, and they had a strangle on it. They bought a call and they bought a put, and both those positions were down. And this one, AMD has been crazy. It went from 24 to 29 to 30 in a week, and it's been crazy. And you know, nobody wants to lose, but you can't be scared to lose and take it as a learning. Like, you got to learn from your losses. You can't just like lose, put another trade on, lose, put another trade on, lose. You know, that's bad behavior, and you should, you know, if you lose too many times in a row, you should really stop trading and reevaluate, like, what are you doing, like what's going on here. And you know, buying calls in AMD the last 2 weeks has been very profitable, as you see. You know, $10 swing here in just a few weeks. But what really trips people up is this two-sided action really trips people up. Is it going to go down? Is it going to break out? I don't know. And a lot of people go very heavy, like, okay, it's going down, I'm going to load up on calls, or it's going down, I'm going to load up on puts. And then, you know, it doesn't do what you want to do. Like right here, AMD right here, this could have gone sideways for months right here at 24. It could have. So you always got to plan for that. Like, so when you're buying premium, especially when premium is high, AMD's premium is kind of on the higher right now. It's 40. It kind of came down a little bit from where it was. It's in the 48 to 50 now. Last time I checked, but you know, what really trips people up is especially like this. You know, for newer traders, skyrocketing and then getting rejected here at 29.94, going back down. People start loading up on puts, and you know, you just got to be very careful. Like, don't trade scared, and don't trade like too aggressively on these big movers. Like, and then when you do lose, like, don't try to quit. Like, don't say I'm going to quit trading options because like it's hard. Like, making money is hard. I mean, outside of the market, like if you're talking about, you know, it doesn't matter if you're trading or whatever. I'm talking about like outside, to make a 6-figure income, it's hard. To make, you know, $80,000 a year, it's hard. It's hard to work. They command you. They make you sit in a cubicle. They command all this time from you. They make you go to 10 million meetings. At the end of the day, you're like, what the heck did I just do? And then you're taking the train at 5 a.m. You don't get to home at 8 p.m. You know, there's no life. You know, making money is difficult, and making money in the market is no different. Like, if you have a full-time job and you're trading, you know, treat this as a job. Treat trading as a job. It's difficult. It's hard. You know, that's pretty much what I wanted to say was, you know, is don't be scared when trading options, but obviously there's a time to get aggressive and there's a time not to get aggressive. Like, you don't want to load up, you know, when you have huge swings like this, especially like AMD, you don't want to load up on puts and then it skyrockets and all your puts go to zero. So, I mean, there's times to be aggressive. Like right now in this political environment, I'm trading very small. Like, there was a time that I was loading up, but that time is not now for me. I'm just trading and I'm hitting my marks. On Fridays. Fridays have been the worst performers for me for the last like 2 months. I think I've lost the last 4 Fridays in a row. I actually lost on Alibaba on Friday, but because I traded small, I lost $120 on Alibaba on Friday. It expired on Friday. But I've hit my mark on Alibaba the last 6 times. So if I lose one, it's okay. You know, don't beat yourself up. But you got to understand what it takes to be profitable and what it takes to you know, learn from your mistakes. You know, you definitely want to lose from your mistakes. Samuel Square, buy put or buy call. I actually was looking at Square today to put a. Put a trade on. One thing that I will say is IV is kind of high. The options were kind of expensive. Let's see what the the options are coming in at. I mean, actually, the options came down a lot in price, but you know, for $8 stock to put like a strangle on, it's going to cost you like $2.15, which I thought was a lot. And right now, it's been in this like mode here from 87 to 90. It's just kind of swinging back and forth. You know, is it going to break? It looks like it wants to break out here, but it could easily just not go to 80. The one thing that I am watching this week that might be concerning is there's a potential Cat 5 hurricane going to hit the East Coast, and usually when natural disasters happen, who knows what's going to happen to the market. So I'm not like going super hard today. I'm not going super hard this week. I mean, I did put on a position on AMD today. It's currently up $26. I put I cashed out my Chipotle trade. I had a vertical call spread on a vertical put spread on Chipotle here. Closed it out for 59 cents. I put it on for $1.30. Closed it out for 59-cent debit. So I got like a 55-60% winner there. I put on Microsoft today. That was pretty much it, and then I put on an Alibaba strangle as well. Hamed says, when is it a good idea to average down on your positions? It depends on the chart. So one thing that I was doing, not Tesla, Twitter. Okay, so this is an example that I did a couple months ago or more than that. But Twitter's been one of my top performers this year because I mean it mainly went from 16 to 47, and there's been a lot of ups and downs, and it's been recovering. So I've been pretty bullish on Twitter, and right now it's kind of getting interesting again down here in the 30s. You know, we're seeing some weird momentum down here, but what happened here was back here in February, they had earnings and it ran up to like, you know, 37.50 and it dropped down. So I actually had I think I had $40 calls here back in March because it looked like it was starting to break out after earnings. Like after earnings, it didn't really do a whole lot of anything after, you know, for a few days. And then one thing that I know about Twitter is that usually when it stays the same for a long period of time, it goes back up. And what happened here was it went up. So I had some calls for the 40. It went down, and I paid like $1 for these calls. So it was like $36. I paid $1 for these calls for 40. It went down. Those calls were then like 20 cents. And then it went down. And then the one thing that you have to do though when you're averaging down is make sure you have enough time, because if you do it for like a week, it's gonna be hard to make that money back. So when I average down, I only average down on stocks that I believe in. So since I'm long-term bullish on Twitter, I bought some longer. I would buy like, you know, back in March I was buying October or September calls. I think they were September. But you know what happened here was, you know, it took a long time. I sat on these calls for a long time, but my average position went from $1 down to like 30 cents, and I loaded up and I made like, you know, $1,000 on this run here. You know, it took months of holding. Like you can't, if you don't have the capital to tie up, don't do it. But that's how I average down there. Is if it's something that I still believe in, and if I think it's going to recover, and I think the risk to reward ratio is going to be good. Like if I think it's going to return to this level, and I mostly do it, you know, since we're in a bull market, I mostly average down on big drops. So if I'm holding already and it drops big, I then average down and wait for the recovery. Now it could not happen, but then, you know, my average is a lot lower. It could not happen, but with Twitter, I've had very good success with that. If anyone has any other questions, definitely drop them here. I would love to answer any of these questions here. If this is your first time here, welcome. Join our free options trading group. It's actually linked below. Who's here from our options trading group, and when did you guys join this channel? Definitely would like to know that. You know, Twitter right now, for me, I actually average down here, Hamed. So I actually have some calls here. When was this? I'm down $25 on. So I bought these October calls. These are cheap ones though, so I didn't have a position on it. I just averaged down. You know, I think it's going to go back to 40, but then we've had this drop, so it's been pretty bad here. So I don't know if this is going to break or if it's going to go back up. You know, I don't know. You know, I guess we'll see. I guess my risk is pretty small on this. Crypto, welcome. Glad you've been here a month, man. Definitely appreciate you being here. Yeah, these I bought. When did I buy these? Okay, so I bought these for 14 cents on November 6th. So I actually bought these last week on November 6th. So I actually did on this drop. I just didn't realize it was going to go down even more. But, you know, we'll see what happens here. So, you know, trading, you know, going back to being scared trading options, you know, a lot of what I've seen online was a lot of people that say, like, trade Forex and trade like penny stocks and stuff, saying you shouldn't trade options because the volatility. But at the end of the day, like, you manage whatever risk that you put on. If you want to do a highly risk trade, you can. If you want to do like a low risk trade, you can. That's why there are options. Like, there's a lot of flexibility in options. Like, if you want to day trade something that's going to make you $100 in 10 minutes, you definitely can do that. But if you want something that's going to make you $100 in a month, you can also do that too, where the time commitment is a lot less and the knowledge has to be a lot less, and also, you know, your risk to reward is going to be a lot less. I mean, obviously, time and money and all that account to what kind of trades that you put on, but, you know, at the end of the day, when you're trading options, you choose the risk that you want to put on. You don't have to, you know, if you're putting in like, okay, I'm going to buy 100 contracts at $40 for the $40 strike on this Twitter here, you know, and it doesn't go up, you're going to be really sweating it because you just spend a lot of money on contracts that if you hit it big, you're going to win, you're going to make a lot of money, but that's more of a gamble. Like, you can't trade like that. Like, mostly you just want to trade consistently, hit your targets profitably, and then as time goes on, different political environments, you're going to want to scale up risk or scale down risk. So, you know, that's pretty much all that I want to say today. You know, appreciate everyone that was rocking on this video, that was here. If it's your first time here, please hit the subscribe button, hit the like button if this video was of value to you. Definitely appreciate that. It helps me out a lot. Thanks a lot.